Hey everybody, this is Jose Blasco here. I'm just getting my windows organized here. In the meantime, it'll be good to use just a few seconds for a sound check. Could you please confirm with me that you hear my voice correctly, and that way I know we can start. Everybody, I think everything should be okay, but just in case, it'll be good to have your confirmation here, guys. Wonderful. Thank you so much, everybody. Boyan, how are you? Mark, good to see you. Happy Easter, everybody. Melanie, Leland, Andrew, Gali, Sastra, Nitesh. Wonderful, everybody. Very, very nice. Okay, so let's begin our day. How are you, Pansy? Good to see you as well. It's wonderful to have you all here together. A special weekend with the Easter, isn't it? And apart from special weekend, crazy world, craziness continues in many, many countries when it comes to confinements, lockdowns, and things like that. So again, one more time, like I've said in prior sessions, I am not streaming this session from my normal location. So that way I will minimize the use of the bandwidth because I don't have the full bandwidth available for my internet connection. And therefore I will not switch on video camera stream. So it'll be my voice on top of the charts. Okay. And we'll be discussing multiple things. Okay. Very good. So anyway, Paul, how are you? Danny, good to see you all. Wonderful, everybody. So welcome to the session, everyone. Today is 13th of April, 2020. My name is Jose Blasco. I didn't say it, even though I was speaking for a little bit of time already. I'll be your guide, your instructor, your coach, your trainer. I'll be taking care of the session for you guys today. Today, it's the weekend, so we are getting together for sharpening purposes. Markets are closed, so perfect timing to basically look at ourselves in the mirror and look at improvements and reviewing what we do and things like that. Okay, so today you guys have sent a few questions I would like to address in the session. I received a few emails and I'd like to take a look at these all together because they are very relevant questions, and also some questions that you may send to us are easy to respond and we just reply with an email, but other questions are difficult to reply in an email because they imply a demonstration, sharing charts and things like that. And then, these sharpening sessions are the ideal place for us to meet up and talk about it. Okay. And by the way, sometimes, just so you all know, sometimes some of you are not able or available to join the session. It's still okay for you to send your email with a question. So I can go ahead and run the answers like you were here. And then you can, at your own pace, catch up with the recordings, because obviously all those sessions are posted on the YouTube channel and you can go back and watch and rewatch as many times as you want, isn't it? Let me see. Danny, Roy, I owe you an email, by the way. Ray, how are you, Ray? Good to see you all. So anyway, so let's begin. We have a disclaimer. I'll take care of the disclaimer and then we start. So disclaimer, the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. And this is the disclaimer. And therefore, now the session is officially introduced and we are ready to begin. Okay, so multiple things to do today. Okay, so I got TradeStation. I have of course TradingView. I have all sorts of things here. I have questions that you guys send. I have this file. I have this file. So multiple things that we're gonna be looking at all together today. And grow with it. Okay. In parallel, you are welcome to anytime phrase anything, ask any question on the chat box and so on, and I will be taking care of it too. Okay, so that when we do sharpening sessions, I would guess that normally we spend like an hour and a half going over concepts, details, tools, whatever. I'm happy to stay longer. I'm also happy to conclude the session sooner if there are no more questions. Okay, that would be a great thing, even though it would be a bit weird because I'm here to help. So make sure that we use this time wisely, everybody, and feel free to ask any question you may have. Okay, no matter if it's advanced or basic. Okay, but before we start today, I wanted to show you something that you will probably appreciate very much, and I kind of said it on Thursday when we did the option session, but I also said it was not fully confirmed, and now it is confirmed. So everybody take a look. What you see right now is our website, okay, TradeWithUFOs.com. All of you are in the session today because you are aware of the beautiful button Get Together here on the upper left, and when you click on the Get Together button, you come to our calendar, right? And I believe all of you should be aware of this because if that was not the case, then you would not be here. That's what I'm guessing, right? So now, why is this important today? Well, this is important today because I want you all to be aware that on the 20th and the 21st, as well as on the 23rd and the 24th, we're going to be running 2 special classes, okay? And these classes are free for everybody, okay? So all of you can attend, okay? Actually, you should be registering now as we speak because it takes a few seconds to do it, so that way you have it done. Okay, so the class that we'll do on the 20 and the 21 is on how to build your trading plan. Okay, so it's going to be 2 days from 8 a.m. to 10 a.m. New York time, so it's 2 hours each day. And then on the 23 and the 24, it's a class on how to do back testing, and this one is going to be 3 hours on Thursday plus another 3 hours on Friday. Okay, so again, many people around the world are stuck at home with lockdowns and things like that. So maybe this is a wise way on how to use our time. And again, those are 2 subjects which are tremendously important. Okay, and by the way, they apply to all methodologies and everything else. So let's say some of you are part of our community, and let's say, one of the key tools I use all the time is AutoUFOs, right? But let's say some of you don't use AutoUFOs. It's okay. You're still welcome to come and join those trainings because the concepts that you will learn there, they apply to everything, to all trading methodologies, on how to backtest them, etc., etc. So you are certainly welcome to join us. How does it work for you to register? So you just put your mouse on top of this, okay? And when it says here, click on the course and then click on the registration link. This course is free. Make sure you repeat the registration process for each day. In other words, you're going to have to click 4 times, twice for the course on building trading plans, twice for the course on backtesting. Let me show you. So if you click on it, okay, it will open this page, okay? And here is the link for the registration right there. Okay, so if you click on the link for the registration, okay, it will open another page, okay, survival to mastery building your trading plan, okay, and notice here on the bottom right, you have the register button, okay, and you have to come here, click, register for Monday, and then do it again, click and then register for Tuesday. Okay, so make sure you do it twice, both for the class happening on Monday and Tuesday, and also for the class happening on Thursday and Friday. Okay, again, Melanie, you are already in. Okay, that's very quick, very nice. That's efficiency. Love it. So very nice. Okay, so you guys, I think it'd be good if you do it now, so that way you don't forget and you get your links. Because when you register, as I said, the class is free. Okay, but the registering process, what's going to happen is that you're going to receive a collection of emails, and for every day you will have a special link to attend, and for every day you will have a special password to attend, and that's going to be unique to all of you, meaning that you cannot forward the email to someone else and someone else can use it. So the person who wants to use it is free. Everybody can use it, but everybody needs to get their own link with their own password. So you have to do it from here. Okay? Cool. Very nice. So that's it. That was a quick one, and that was something that I wanted to say at the beginning, so I don't forget. So all of you can be registered for these trainings and enjoy it and take advantage of it. Good. So now, back to the sessions. Okay, back to the sessions. And I see that suddenly the chat box got stopped, which my understanding is that probably you guys are going through the registration process. Okay, so I'm gonna give you just a few minutes to do it. Okay, so I'm gonna start slowly with the session today, so I give you time to do it, and then we are back all together here. So the session today, again, today is a sharpening day. It's a regular sharpening day, if you wish, in the sense that sometimes we do sharpening and we just go over, Q&A and stuff like that, and that's it, okay, which is the normal thing. And sometimes we do Q&A, and when we do Q&A, we add more stuff and we review things and things like that, okay? So today, it's a normal Q&A. It's a normal sharpening session, I meant to say. And basically, my plan for today is just to go over key questions that you guys have sent. They are very relevant and they are dense in the sense that it's going to take me time to answer everything properly. So today is going to be a Q&A, but it's almost like a lesson day, like a big time lesson day, because some of the subjects for today are very, very, very important. Okay, very important. Let me see. Nitesh, busy with registration. Very good. You guys take your time. It's okay. I'm giving you time to begin. Mark, is this climate screen available for download? It's not available for download. It's read a screen from TradeStation, but I have no problem to send you the workspace file if you want, Mark, or anyone. So if you would like to have a copy of the workspace file, just send an email to reach@tradewithufos.com and my team will take care of this. Just keep in mind, I am using TradeStation 10 update 45. So if you use any other version of TradeStation, it will not work, okay? Because it's a workspace file and therefore is version dependent, okay? Nice, wonderful, guys. I'm super excited for the training that we're gonna do, okay? And by the way, you'll get to meet another instructor of our Trade with UFOs community, okay? So I'll be there, of course, but there will be also another instructor, and I'm sure you will enjoy very much working with her too. Anyway, again, today, I would like to begin with this question I have received, and I believe I've seen your name earlier. Andrew, yes, you are here. Very nice. So, Andrew, I am now sharing the email that you have sent, which by the way, your email is a question that you typed on the chat box on Thursday, and I asked you. I remember I asked you to be kind enough to be able to send that question in the format of an email or ask today, so we can talk about it properly, because Thursday was the options day, and therefore, we were trading, so there was not much time to talk about questions, okay? But your question is very, very important, okay? And this is not the first time that we are receiving such question among you guys utilizing the methodology, the Trade with UFOs, the auto climate, all the tools that we use. And, so basically, when this happens, when I receive a question too often, basically it's telling me that there is a little bit of room for improvement on how I deliver the content to you guys and how I share the details of the techniques. And in the teaching sessions, in the sessions that we go over together, I'm always looking for balance when it comes to efficiency, complexity. So, there is one word I love, 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 and maybe it's because I'm a perfectionist, and it's the word pragmatic, right? So, pragmatic basically means to get 80% of the results with 20% of the effort, right? Instead of getting 100% of the results with 100% of the effort, I really love to use 20% of the effort to get 80% of the results. And this kind of philosophy, which is how I do many things in life, uh, I guess also applies to some of my teaching, right? And in this sense, Andrew's question is very, very good in the sense that it talks about targets, and it does show that the way I have conducted some sessions in the past, probably, let's say they are good enough, but there is 20% room for improvement to get to that 100%. So this is exactly what we're going to discuss today. Today we're going to start the day looking at Andrew's question, which has to do with setting targets, and we're gonna talk about that because it's really important. Okay, so let me take a look at anything else. Yes, Mark, yours does not have the daily pairs. You can just add it yourself, or I can certainly go ahead and we can send that file to you. No problem. Cool. Okay, so let's begin here with Andrew's question. Okay, so Andrew said, I have worked through the self-paced survival to mastery and attended the live survival to mastery Forex in action with Andrew. Okay, so in other words, Andrew is very knowledgeable when it comes to the methodology that we run with the AutoUFOs, with the AutoClimate, with the flow chart. So let me get it here on the screen so everybody is 100% focused on what I'm saying, just in case some of you are newer to our sessions. Okay, so we're talking about this. Okay, so this is the flow chart that defines a very specific methodology that we teach in the survival to mastery Forex in action class. Okay, and since completing survival to mastery, I've been having great success with your excellent indicators and methodology. That's very kind of you. More profitable than any time since joining OTA in 2008. I'm very happy to see that. And again, it's things in life happen the way they happen. Is sometimes we attribute success to certain things, but in the end we are who we are thanks to our past actions and past experiences. Okay, so probably some of the things that we've done together recently, Andrew, clicked, and this I'm sure has a lot to do with what you've been doing since 2008. Okay, I used to be part of OTA myself, okay, and some of you may know this. So I also can attribute a lot of the things that I know thanks to what I learned when I was there, starting as a student many years ago as well. Okay, so it's very kind of you to say that. At the same time, again, your success and your achievements belongs to you, okay, and it's your time and effort. So I will congratulate you for that too. Okay, so I have backtested six currencies from 20 to 30 trades each from March 19 onwards. I recorded great results, plus 250 to 500 pips per currency. Okay, so that's good. That's wonderful. Okay, with live trading, however, I have had many safety target hits, which is good because that removes the risk of the trade. So it means that many times you got into a trade, you were out of risk, great. But then here it says, I am able to follow entry criteria religiously, but I struggle with the management of the final targets. I have difficulty keeping trades open, do not seem to want to lose the safety target profit, which on reflection is stupid, as I am closing risk-free trades. Even though I have backtested many currencies and I'm very well aware of the possibilities, probabilities, why won't I leave trades alone? Any suggestions? I am thinking more backtesting. Okay. Thank you so much for your commitment and time. Best wishes. Okay, Andrew. Okay, so Andrew, thank you so much. This is a fantastic question. Again, as I said before, it shows a little bit of room for improvement on my delivery for you guys as well, because let me confirm if I'm right or not on what I just said. Everybody here, please go ahead and type in the chat box. Anyone has ever experienced a situation similar to what Andrew is describing here? Anyone has been trading the methodologies, it's going well, but sometimes struggling to reach safety target, being a little hurt there on whatever it is, could be confidence, psychology, whatever, and struggling to hold those trades until reaching a further profit. Anyone has been there before. Okay, so go ahead and let me know if that's the case. I love how you phrase it, Andrew. Really, it's fantastic, and again, great work doing what you have done. Okay. Bojan, yes. John, yes. Ahmad, yes. Matthew, yes. Ray, yes. Nihed, yeah, I love it. Melanie, yes. Roy, Maria, Leland. Okay, perfect. So, I mean, in one hand, I wish you guys said no, because it means that you are 100% comfortable with everything happening in your trades, right? So, in one hand, I wish you guys said no. In the other hand, I'm happy that you guys said yes, because it kind of confirms what I said before, which is I need to add a little bit more on trade management, on reaching targets, etc., and that's important. That's important stuff, and I can see that when I see your responses here. Okay, so thanks for that. It is always difficult for me to hold the profitable trades. Mark, Andrew, yeah, very good, perfect. Okay, so guys, I want to talk about this from two angles. Okay, and this is again a very important conversation. So first of all, we've talked about trading psychology a million of times. We've talked about the importance of trading psychology, and Boyan is with us today. Boyan conducted last year a fantastic session that, if you have not watched yet, is recorded on the playlist under Sharpening in our YouTube channel. Make sure you don't make sure you don't miss, sorry for that, the session that Boyan did last year. It's named Trading Psychology under the Sharpening playlist. Okay, make sure you don't miss it. Trading psychology is critical. I cannot teach trading. I cannot trade without considering and adding comments related to trading psychology, because it goes hand in hand. You cannot separate. Just like you cannot separate risk management from a methodology, you cannot separate trading psychology from trading. So one of the reasons why some of you may be struggling, okay, in your trading and holding into trades that are profitable to become more profitable and things like that, maybe one of the reasons may be trading psychology. And instead of maybe, I would say very likely is trading psychology, because it happens to everybody. It's a human characteristic. I am not a psychologist, so the way I'm going to explain it is probably a bit oversimplified, but basically, for whatever reason, humans, we tend to be more comfortable, even though it is counterintuitive and nonsense, but humans, we tend to stay longer in a painful situation than remaining in a pleasure situation for a long amount of time. And I don't know why is that. Again, I'm not a psychologist, but I believe that there is a lot. One of the key reasons has to do with hope. Hope is a human thing. Hope is something that most cultures around the world are kind of preparing the mindset of most people to be in hopeful mode. Okay. And the reason why is because I guess that our condition of being human implies that this is something natural in our mindset to be able to go through situations that are difficult with less pain. Like, for example, right now, so what's happening? So we have a virus in the world which is killing people. This is not a joke. It's really, really problematic. It's unseen, at least for many decades. And so what happens? Well, we all hope, hopefully soon there will be a vaccine. We all hopefully things go back to more normal. No, that was the reality. If we were to look at factual information, and I'm not an expert in healthcare, probably we would expect that things may improve towards the summertime in the North Hemisphere, but then when the winter comes back, we have a second wave of more of the same. Now, no one wants to hear that. Not even me, that I just said it's painful to hear what I just said myself, because we all hope it's not going to be the case, right? So I guess that, cultures, humankind, human psychology, religions, everything that we have around since we are born until we are an adult person trading, everything it's around hoping. And therefore, when a situation is bad, like a trade is going against you, automatically, unconsciously, it's a normal thing that our mindsets switch to hoping mode. And next thing you know, we have the tendency to, instead of uh, cutting a loss short and get out of a trade that is not working well, instead we hope, please come back, please come back. I hope it's going to be okay. I'm pretty sure it's going to come back. And we convince ourselves of things that make no sense, but we convince ourselves of that. Okay. So in the opposite extreme, we have the pleasure. Okay. So we are in a pleasure situation um, because of the same reasons, which are the complete opposite. Okay. Just like, everything in life, got extremes and a balance point in between, right? So you got the good and you got the bad, right? And you got the point in between. You got the food that is tasty and the food that doesn't taste well, and you got something in between. So the same thing happened with hope, right? So you hope when you have pain, okay, and when you have pleasure, so what happens? You fear the pleasure is gonna stop. So what happened when you're in a profitable trade? Next thing you know, we start fearing the pleasure is gonna stop, and we have this urge to collect the profit, to guarantee the pleasure has been kind of like materialized and collected. And therefore, many times we find ourselves, instead of in a position where we maximize and capitalize on very nice market movements, we basically end up with small profit, which may be okay or maybe enough, but at the same time, we leave a lot of money on the table. Okay. And so one of the key reasons, okay, and I'm kind of summarizing a conversation that could take a whole day in a trading psychology course. So I'm kind of summarizing the reason why many of us, especially when we are in early stages in our education, when we are learning how to trade, this used to happen to me a lot. Okay, we are in that situation where when a trade goes against us, even though we should get out, we have this temptation of staying in. And when a trade starts moving our way, where we should stay for longer, we have this huge, massive urge of closing it. Okay, so this is one of the reasons. Okay, one of the reasons. Now, other reasons are more technical. Okay, I'm going to get there because I want to give you solutions. Right now, I just gave you an explanation of why certain things happen, but that's great to know, but it doesn't fix the problem, right? So I want to get into solutions too. But again, I am a strong believer on understanding why things happen help a lot to build confidence on the solutions provided, because we're not kids, right? So, if you are 5 years old and you are being told, do this, you just do it. Why? Because you have the authority of the adult person who asked you to do that, imply you're just going to do it. Okay. You just follow the instruction. But when we are adult, our decisions, especially for you to act with confidence and with efficiency, we need to understand why. So that's why I started giving you a little bit of an explanation that has a lot to do with human psychology of why most traders struggle to stay in profitable trades for longer. So how do you fix this problem? Well, fixing this problem, if you think about what I just said, a minute ago I said when I started learning how to trade myself, I struggled with this issue myself. Okay, so what's the difference with when I started compared to now? And I don't mean to say I'm the best trader in the world, because it's not the case, but I am experienced, at least to a certain degree. So what's the difference? Well, the difference is that experience. So that experience have got me seen many situations where I've made a mistake of closing a trade too soon. I've acknowledged that, okay, and then I've done the right thing to not to close a trade soon, and I've seen the benefit of it. And through time, as you expose yourself to do the right thing and get paid for the right thing, do the right thing and get priced for the right thing, do the right thing and get paid for the right thing, instead of do the wrong thing and it's okay, do the wrong thing and it's okay, well, there is a moment in time where it clicks on you, and then it's just like, it really, really, really doesn't make sense. It's just like when Andrew makes this reflection here, where he says, which on reflection is stupid, as I am closing risk-free trades, okay? Which Andrew wrote it, meaning that when he thinks about it, he fully understands why he should not do that. Well, the reality is that still in some trades, when trading live money, he's still doing it, even though there is a full understanding of why he should not do it, right? And I was in the same place, by the way, it's exactly the same. I'm sure many of you have been there too. Okay. So again, how do you move from I understand that thing, I should not do it like that, I should do it like this instead? How do you move from I understand it to it's no way I'm going to do it differently any longer. Okay. How do you move from I understand something to I have completely internalized it? It is part of me. It is part of my genes now. That's how I do things. It's no way I'm going to do it differently, because it's complete nonsense to do it differently. It actually puts me in outside my comfort zone to do it differently. Okay. What's the difference? The difference is the amount of times you have done it that produced a better result, and you have developed confidence on doing it that way. Okay, that's the big difference. So now, when seeing this question asked by multiple students and your email, Andrew, so that's when I got to this realization where I need to help you better to get better targets. Because if I help you get better targets, it's not like you're gonna make more money, which you would. But the most important thing is that you would be priced more often for doing the right thing if I was to add certain rules that would make your life easier. And if you were to be priced more often by following another set of rules that would bring closer efficiency, profitability, comfort zone, and all of this. So next thing you know, you're going to find the benefit of feeling less effort for you to let your profits run in a more efficient way, instead of feel the fear of having the trade go back against you after having the trade move your way for a while. Okay, again, what we discussed before about the pain and the pleasure, that we stick longer with the pain because we hope it's going to be okay, where when we got pleasure, it's difficult to keep in that pleasure mode because we fear pleasure will stop. Okay. So having said all of that, which is a long introduction, but it's critical that you listen carefully, and maybe you have to listen to this again because it's important for you to understand why I am about to teach what I'm about to teach. I'm gonna propose an additional rule to everything that we are doing. I'm gonna add an additional rule, and after I explain it, you guys tell me if it makes sense or not. And if it does make sense, then I will propose that you guys backtest it. Okay, and by the way, in 1 week time, we're going to be doing a backtesting course, isn't it? On the 23 and the 24 of April. So you can certainly attend that course to learn how to backtest if you haven't backtested before. And you will see a greater level of efficiency. So you will start feeling more confident with your targets. And, it's kind of like this vicious circle, but a vicious circle normally is a negative thing. Well, in this case, it's a positive thing. Right? It's a vicious circle that drags you to do the right thing. Okay? That's the idea. Let me see your answers. Boyan, yes, because I have experienced it, not anymore, as I've backtested. Exactly. That's on your watch list. Very good. Maria, I love the session that Boyan did. Yeah, absolutely. Thanks, Jose, and everyone. Wonderful. Very much deserved, Boyan. That session was amazing. So anyway, so here's the plan. Okay, and to illustrate the plan, what I'm gonna do is I'm just gonna get into TradingView here. Okay. So example, I want to go back to a trade that we put together the other day on the session. Okay, and to be able to see this trade, you know what? I'm gonna do it here on the daily time frame. So I'm gonna go ahead and turn on show executions for the euro. And when I do that, I'm connected to TradeStation, so I'm going to have to switch to log out and go for the paper trading, which is when I took this trade, and that should show arrows on the chart. Here we go. Perfect. So let me maximize this. Oh, sorry, not that one. Let me maximize the chart, okay? And now here, okay, here, you probably see those little arrows, red color arrows here on the euro, okay, which is a trade that we planned last Tuesday during the short-term session, okay, which is a trade that some of you took, isn't it? And if you took it, you saw the price of the euro move towards our target, reach safety target 1, keep going, okay, but final target was way below. We never reached the final target, and then it turned around And if you didn't move the stop, you were stopped out for a break-even trade because you collected your safety target profit and then you collected your loss with half of the size, so you were breaking even. Okay, if you did nothing, you broke even in this trade. This is a trade from the last Tuesday. You guys recognize this trade? Anyone was in the trade, from the last Tuesday? Anyone by any chance? I'd love to know that. And you will see why I'm bringing this trade to the explanation today. Well, first of all, it's a trade that is fresh because it's the last trade that we planned together here in the room. Paul was in the trade, Boyan was in the trade. Very nice. Very nice. So reason number one why I'm bringing this trade is because it's the last trade that we planned. But reason number two is because this trade is probably the exact problem or struggle or kind of uncomfortable situation that Andrew has defined in his question. And I think it's a great idea to use this one as looking at what else could you have done that potentially would have created a better solution for this trade. Okay, so now again, for the ones of you that are newer to the sessions, okay, when we entered the trade that day, so we were entering on the fourth dot of the climate. Okay, so we had a down climate that was confirmed. Statistics for down climates suggest it's going to be 5 to 6 days. Normally, we always think about 6, isn't it? Okay, we always think about 6, and we always round up. So 6. So basically, you entered on number 4, expecting 2 more days of red climate, and then potentially a climate change, which in this case happened exactly the way statistics suggested. It's not always the case like that. Sometimes climate overextend, like here, for example, where statistics suggest 4.3, let's call it 5, and we got way more than 5 dots. Okay, but in this case, it was exactly what probabilities suggest. And so think about the concept of probabilities. Okay, why is it that every time we trade, we like to stack probabilities in our favor? Why is that? Well, the reason why is number one, because taking decisions out of probabilities equals being objective. Okay, if you take decisions based on an impression, then it's subjective. If you take decision based on figures like that, it's totally objective. Okay, it's black or white is what it is. Okay, so that's one of the reasons why we love to use stats. But the other reason why is because if you act when stats suggest that acting makes sense, then you increase odds for you to be profitable. Where if you were to act when stats suggest it's not a good idea any longer, then basically you are doing what I call, as you know, a hopeful trade, which may still work, but it's based on hope instead of a sensible plan. Is that making sense? So we love stats because of these reasons, right? And we do have a rule. We do have a rule here, which is when there is a climate change, get out of the trade. Okay, there is a rule here that says when there is a climate change, get out of the trade. Okay, so one thing I have find out, and I want to ask this question specifically to Andrew, also to everyone, but certainly this question is especially devoted for you. So question, Andrew, when you did your backtest or when you started trading live after the backtest where you saw the potential of the methodology, so question, did you close trades after having a climate change, or did you left the trades open after having a climate change? So this is one question I would like you guys to answer, because again, the first thing to keep in mind is that if there is a reason for you to enter the trade, and the reason for you to enter the trade disappears, then that automatically becomes a reason for you to exit the trade because you don't have a reason to stay in. Okay, Andrew, so you close if the climate change. Very good, perfect. Okay, so that's well done. Okay, but I do know out of many other questions that we have received, similar to yours, Andrew, that many students, okay, they plan the trade. They may decide, hey, this is going to be my entry here around the EMA. Somewhere above, I'm going to have a stop. This is going to be my safety target. Okay, and then here all the way in the bottom is going to be my final target. And notice that there is a climate change, and some traders stick around without closing the trade. Okay, so if you have a change of climate, notice that in the methodology, okay, climate change is not optional. Time stop, too far too fast, or UFO trailing is not optional. In the methodology, climate change is a must, even though I guess that because of hoping, okay, some traders don't close the trade at those moments. Okay, so everybody keep that in mind. Okay, but now, the other thing that happens, okay, in this case, to be honest, we had the exact amount of red dots that statistics suggested. So in this case, it's fine. But here's another case I would like you guys to explore. And this is what I meant earlier when I said maybe we should add a little bit of a variation to some of, one of the rules, which has to do with the stats. So let's say instead of 5.11, okay, let's say we have 3.11. If we had 3.11 and we round up, that would be number 4, isn't it? So let's pretend that the climate is supposed to last for 4 candles, and when we entered that day, okay, it was already candle number 4. So you enter 4 out of 4. Is it still okay for you to enter the trade? Yes, because the trade could still last 1 day. Okay, and on Tuesday, when we put this trade together, we were doing intraday trading. So if the trade lasts 1 day, it's fine. So it's still okay for you to enter candle 4 out of 4. It's still okay. But now notice how the next candle is not a climate change. Okay, but the next candle not being climate change would be candle number 5. So what happens when you reach candle number 5? Well, then you start having much less probabilities of success in your trade. What I mean by success is reaching the final target. Why is that? Well, because the climate is less likely going to continue moving in that direction and more likely going to sooner than later switch and become the opposite type of climate. So instead of waiting until it fully changes and then close the trade at this price point, okay, one more efficient way would be to be a bit more active, okay, and when the climate reaches the candle after the candle suggested by statistics, okay, so if it's 4, it would be number 5. If it's 6, it would be number 7. So the moment that happens, okay, you would want to then change your final target to whatever other UFO is available at this moment in time. Okay, so for example, I'm just gonna go back to the 55-minute time frame. I'm gonna turn on AutoUFOs. Okay, so let's say you enter on that day. Okay, and remember at the end of the day, if you haven't reached safety target, okay, so, if you haven't reached the final target, okay, you would have gone from 4 to 5. So now the climate, based on my prior assumption, the climate is likely going to change, okay, or is more likely going to change than continue. And then now you want to change the safety target. Okay, so what would you do? Okay, so on that day, okay, which is so this was the close April 7th, so this is April 8th. Okay, so I'm just gonna move back to April 7th here. Okay, so the ending part of the day is somewhere here. So let me go back here. Ending part of the day is right there. Okay, so what would you do that day? So you would have AutoUFOs on, okay, and now because you have reached the end of this candle, okay, you have reached the end of this candle. 1 second, guys, I need to have a sip. Sorry, everybody, I'm back with you. So because you have reached the end of this candle, okay, right there. So then you would now consider that the trade is at risk of not reaching the final target because the climate may not continue expanding any longer. So then you would implement a change of final target, and therefore you would just pick any UFO available on your edge time frame, in this case 55, okay, and that would be your final target now. Okay, this would now become your final target. Okay, and if I was to click replay, okay, so that's it. You would be out of the trade at this moment in time on the next candle. Okay, you would be out of the trade right there. So not only you would have reached safety target one, you would actually be out of the trade fully, because this is happening the day after the climate is exhausted. Okay, so this implementing this type of action would massively increase your reaching final target. And of course, depending on when did you enter the climate. So if you enter the climate at the very beginning, okay, so this will always give more room for price to keep moving further in the further direction. And then let's say the final target was still lower, okay, so then you can always find a target which is closer here, and you would have made a profit from this point all the way to this point, which is nice. Of course, if you enter the climate close to the end of the climate, then this is what's going to happen, that you will end up making a limited size profit instead of a much greater size profit. So obviously, in a perfect world, you enter the climate soon. So that's when you give yourself the greater chance to reaching targets which are further away. But at the same time, what you don't want to find yourself is in a situation of hope where, going back to maximizing this chart, so in this case you have a climate which is supposed to last by 6 candles, right? And let's say you get into a trade, and when you reach candle 6, candle 7, candle 8, let's say the market keeps going, because sometimes it does. Okay, look at that, look at these amazing moves, right? So sometimes it does. But when that happens, if you find yourself in those trades, basically you are really hoping it will keep going beyond what probabilities suggest. And certainly it's very nice after the fact to look at those trades and be like, oh my God, that was an amazing trade. We went from 114 all the way to almost 106. This is amazing. What an amazing trade. Well, yeah, it is an amazing trade indeed, but I'd rather catch a move here, okay? I'd rather catch some move here and be out realistically, and maybe catch another move here and be out realistically, and maybe catch another move here and be out realistically, and maybe catch another move here and be out realistically. And if I keep doing that throughout the whole year, throughout the whole month, throughout the whole weeks, so at the end, at the end of the day, you're gonna be profiting way more greatly compared to rarely you catch one of those super crazy moves. I have said many times in the sessions that the further away your target is, the less likely it is that you will reach that target. Okay. Sometimes I even say something that should never be said by a trader, isn't it? Especially when we're doing intraday trading, where sometimes we have very far away targets. And then what I say is, wow, no way we're going to reach this target before the end of the day, right? And we should never say no way. But, you get my point, isn't it? Sometimes when the target is like so far away, it's like 380 hours away from the current price, it's like, well, really, it's very complicated for price to get there in an intraday move, right? So what would you want to do then? Well, you would want to, certainly set that as a target at the beginning, okay? Because you don't want to improvise a target. You want to be religiously mechanical with your methodologies. So set that as your target from the beginning. But then, as the trade progresses, okay. So for example, here, let's say you got into this trade, okay. So probabilities here suggest that in the movements to the upside, it's 4.39. So we call it 5, right? And climate, was confirmed at this point. Okay, climate was confirmed at this point. So let's say in this movement to the downside, you got some sort of a UFO in the 55-minute time frame, and let's say this allowed you to enter. So if you enter in this candle, how many candles you got? 1, 2, 3, 4, 5, and the climate is supposed to last 5. Okay, so it's okay for you to enter. But as the market is moving up and this candle closes, and now the next one here is going to be candle number 6. Okay, so even though sometimes climate propagate more than what probability suggests, okay, and this is a clear case of that, the fact is that now is less likely this is going to happen. Statistically speaking, is less likely, even though it did happen. So what would you want to do? Well, you would then go ahead, switch to the 55-minute time frame at the end of that day, look for a closer target, and maybe your closer target is somewhere here. So in the end, how much you made in this trade? Well, you bought around this price, okay, and then you sold maybe around this price. And how much you made? Well, from 110.50 to 109. Well, you know what? This is still 150 pips in this case. If I'm looking at this properly, which I'm kind of rounding, the values. So I rather keep catching moves like that, which are highly probable, and just keep doing it. Okay, and if the euro is not coming back to the average, it's not coming back, okay, it's fine. Trade the yen, trade the Aussie, trade the Nasdaq, trade the S&P. There are many markets to trade, but when I trade the one I trade, I want to make sure not only I have a high probability of entry point, but I also have a higher probability of reaching my targets, because if I don't reach my targets often enough, then the problem is that I am very knowledgeable about the methodology. I know exactly what I'm supposed to do, but then I'm not building that confidence I was talking about. And if I'm not building that confidence I was talking about, then I will be greatly impacted by the fear of pleasure becoming pain, right? So I wanted to talk about this alternative possibility on how you set your targets to help you reach those final targets more often, even though this also implies that the size of the profits will be less. But again, if the size of the profit is less, but in exchange you gain more confidence and it's still nicely profitable trades, more than your safety target, well, so that's fine. And now you're going to be able to execute more easily without being impacted by your emotions. So then I would take it. Okay, so this is the additional 20% I was talking about, right? So probably up to this point, when I've been discussing targets, hopefully my sharing has been useful to you guys. But I am realizing that maybe I've not helped you enough in the sense of finding the balance between being efficient enough with the setting of the targets, but also with the speed at which you build up your confidence, especially if you are in learning stages or newer in trading, or you're coming from a position where you were not fully satisfied with your results and now is better, but you are not building the confidence on the setting of the targets, right? So doing this will very, very likely help you to reach targets more often based on probabilities, not based on a gut feel. In other words, based on an objective decision, not on a gut feel. And therefore, now you keep yourself mechanical, you increase the probability of reaching targets, and this should have a very positive impact in what you guys are doing, okay? You guys, go ahead, please, and let me know if I went too fast and you would like me to re-explain anything, or if what I said makes sense, or if it doesn't make sense to you, or any feedback, any question, please, this would be the time before I move into the next question, okay? Andrew, makes sense to you? Very clear. Thank you, Jose. My pleasure. And thank you to you, Andrew, because again, it makes me very proud as a coach, when I see students like you in this case, Andrew, taking it very seriously and putting a lot of time and effort into practice. It really, really makes me very, very happy and very, very proud. And again, I'm not complimenting you because you complimented me in the email. I know you mean it, and I certainly mean it as well. Okay, so way to go, way to do it. Boyan, all clear. Pansy, very clear. Very nice. Very nice. Perfect. Okay. Okay, many of you didn't comment. Okay, so again, I'm here to help, guys. Okay, if there is any question, if you need me to repeat, this is the time. You can always watch the recording again, but I'm happy to clarify. Okay, so please, everybody, don't be shy. Okay, Mark, this can be helpful. Yeah. And Mark, if you don't mind me to say, you are a student that also brought this type of concern to me in an email. I remember once, and again, hopefully my explanation today is also helpful to you and many more. Okay, Ray, it's all clear. Thanks, Jose. Is this notional cases or added as target rule? Well, Ray, the way to decide about that, it's done via backtesting. Because again, some of you may have a mindset where either because of your genes, okay, just to put it simple, or because of your prior experiences, or because of so much backtest and hard work before. So some of you may be 100% comfortable doing what you're doing without having to implement this rule I just explained, and therefore you don't have to change it. Some of you may be in that situation where when you try the methodology live, you are struggling. So then you should implement it. Okay. So to me, it's black or white, but you should backtest it to find yourself, to put yourself in the shoes of someone using it. So you get to feel the benefits it would have for you as a unique trader with your unique trading psychology, and understand the impact in your trading, and therefore decide if you want to add it or not to your methodology. And if you decide to add it, you use it all the time. And if you decide to not to use it, you never use it. But what you don't want to do is to improvise on when to use it, because then you add subjectivity into your actions, okay? And that's not going to help. Very good. Very good. Way to go, Paul. I'll test it. Way to go. Very, very nice. Very nice, everybody. Good. Perfect. Okay. So that was question one, everybody. That was question one. So I'll close here this PDF file. Okay. And then I also have another question. Let me open it up. So this is coming from another student. Okay. This is coming from another student. The student sent this particular file. And apart from sending this file, the student also is asking about the use of range timeframes. Okay, so here I would like to do two things. I would like to talk about range timeframes a little bit, and then I would like to go over all the notes the student has made in this document, and this is going to be a good reminder. And as we go through the notes, we'll get either confirmations or we'll get a lack of confirmation that the rule is correct. Okay, and this is going to be a great reminder, review, and also a good answer for the student. Okay, so let's begin with the range timeframes. Okay, so when talking about range timeframes, okay, the way we have been using range timeframes. Okay, let me go back to the settings the way I had them. I'm a little picky with my charts, so I like to, if I do something, I like to then undo it, so I know everything is where I left it before. Okay. So anyway, let me close the market replay as well. Here we go. So everything is now real time on my charts. Okay. So now, no matter when you trade, okay, no matter what you trade, I'm gonna bring the Forex time frame since we are talking about Forex. So I'll bring the Forex time frames here. So the methods that we use and the tools that we use imply the use of 3 time frames, isn't it? So we use the common time frame to understand the climate and the targets, the edge time frame to be more precise at the entries and have an edge, and then reactive time frames, which are optional, which we use less often because it's manual stuff, and it has an advantage, but it also have a great disadvantage with increasing the risk most of the times. So normally I don't use it in the session, even though it's absolutely fine to use it if you are conservative. Okay, probably you remember that quick summary of the time frames. Okay, now within edge and reactive, okay, you are given 2 choices, which is to use minute time frames, okay, to use minute time frames, or to use range time frames. Okay, and this applies for both reactive and edge. Okay, so just to keep it simple, I'm just gonna focus on the edge time frames. Okay, and I'm gonna say one more time: you are giving the choice to use edge time frames using minute time frames, or you are giving the choice to use edge time frames which are range based. So what should you do? Should you use minutes Should you use range or should you use both? Okay. And before I answer, notice how we don't use range timeframes for common. Okay. And the reason why we don't is because it's not common to use range timeframes. And remember, one of the key reasons to use a common time frame is to attract more people to buy after you buy and attract more people to sell after you sell. So we want to use common time frames, which is the time frames that most people use. So range time frames would not apply there. Only edge and reactive time frames would allow for the use of range time frames. Okay? Cool. So, 1 second, guys. I need to take a little sip here. Okay. So now, range time frames. So what are they? Why do we have them? Why do we have them here? Okay. Well, first, take a look at the set of timeframes that we use when we deal with probably the most evolved markets in the world, which is futures. Okay. Futures are very evolved and they are centralized. So in those very evolved markets, what do? Well, we don't use range. We use share timeframes and tick timeframes. That's what we use. Okay. But what's the problem when we trade Forex? When we trade Forex or CFDs, if you trade outside of the US and you use CFDs as well. So what's the problem? The problem is that there is no exchange. And because there is no exchange, no one is registering the amount of trades that took place and the amount of contracts that were filled. There is no exchange. So you cannot generate share timeframes or tick timeframes unless you only use the data provided by your local broker, which is a very, very small portion of the Forex markets, which are the largest markets in the world by far. I mean, futures is small compared to Forex. Forex is really, really tremendously great. Okay, it's humongous. So, in other words, if you use share information or tick information coming from your broker, some brokers provide that. Well, it's not relevant because your broker is going to be a tiny portion of the Forex market. So then what? Well, that's where the range timeframes comes into place. The range timeframes are kind of like a substitute for volume timeframes and tick timeframes in markets where we don't have volume data or tick data. Okay, and therefore most of the times we apply that to Forex. So let me show you. For example, here we got the 55-minute time frame. Okay, so that's minutes. I can go ahead and with my drop-down menu, instead of 55 minutes here on the top, I can go ahead below and select 55 ranges. And if I do that, 1, 2, 3, next to 55, I got an R, and this is now 55 range time frame. And I could activate AutoUFOs and find my UFOs on the range time frame, which is not the time-based time frame, is based on ranges. Okay? And in other words, ranges means that the high of each candle is the same. So the high, the high, the high, the high, all the candles got the same high. So you kind of make it all equivalent, which is exactly the same thing that happened from a different angle though, but it's exactly the same thing that happens with the shares or the ticks. So if I load a 2,584 share chart on the S&P 500 futures, every candle on my chart will be made of this particular quantity of contracts. So no matter the amount of time it took for the candle to form, each candle has the same amount of 2,584 contracts. Now, in Forex, I cannot calculate contracts because there is no exchange. So what is the only thing I could calculate? Well, I could calculate time or distance traveled. So by using range timeframes, okay, you are making the distance travel from top to bottom to be the same for each candle. Okay, and therefore you are adding what I would call equivalency among those candles. And this is one way to kind of zoom in and get to have a little bit of a greater understanding of what you got in your hands. Okay, this is exactly what we do in the futures markets, but we do it with volume and ticks because it's even more precise than range. With Forex, we don't have that, so we use range. It's the best it can get. Okay, so now the use of the range timeframes, if the trader decides to use them, and if I say if, you just understood is optional. So the use of range timeframes is optional, and if the Forex trader decides to use them, you need to decide how to use them. And basically, when I say that, what I mean is that you have two choices. Choice number one, always use time-based, plus plus range-based timeframes. Okay, so that's choice number one. In other words, if you are planning on a trade, you check the time-based time frame, 55 minutes in this case, and no matter if you do have a UFO that meets the rules or you don't have a UFO that meets the rules, you then go ahead and check the range-based time frame too, and you may find a UFO that you didn't find in the time-based time frame, or you may not, and then you may have to group them, or you may not have to group them, like we do in futures. Okay, like we do in futures. In futures, okay, what we do is, let me bring futures to the main screen. So if I open, for example, the S&P 500 futures, okay, it's loading. So if you turn on S&P 500 futures, I'm still waiting for data here. And as I told you, I'm not doing this session from the normal location, so the bandwidth is a bit problematic, okay, especially with latency with the TradeStation servers, which are located far, far away from Asia. Okay, well, hopefully it will not take that long. Come on. Okay, well, anyway, while this is happening, so I will just say it. So you have the 2-minute time frame on the left, the volume-based time frame in the middle, the activity-based time frame on the right. So this is ticks, this is shares, and this is minutes, right? And basically, we take the trade wherever the UFO is. And sometimes we do have a UFO, let's say somewhere here, around 2780. Okay, and then maybe on that chart that UFO shows in a different location, and maybe in this chart the UFO it's not 2780, it's maybe 2781, and it drops all the way to 2778. Okay, while this one may be 2780.5. Okay, so this one may be 0.5. Okay, and the bottom part of the UFO may be 2779. But if this is 0.5 and this is 79, somehow it's like that UFO, it's kind of like within or overlapping that UFO. Okay, so it's like this UFO is somewhere inside. Okay, so you got overlapping UFOs, which sometimes is like this. Okay, sometimes it's like this. Okay, sometimes it's different. Sometimes those UFOs are kind of one on top of each other or overlapping like that. And when that's the case, that would be the top, that would be the bottom. And basically what we do is that we treat it like it's a one big UFO instead of two. Okay. Now, the thing is that those two UFOs, the way I draw them, they were on the same chart, but sometimes they are in different charts. Okay. For example, this one here has a top located at 2778.25. And the bottom is 2777. Okay, 2777. So if you think about it, okay, 2778.25, okay, it's somewhere here. Because the bottom part of this one is 2778.25. Oh, actually, that's the same value. Sorry, I didn't read it correctly. So that's the same value. So in other words, that UFO okay, that UFO, if I was to draw it on the same chart, is right there. Okay, right below this, we got that UFO. If I was to draw it on the same chart, where the top is 2778.25, okay, and the bottom is right there, which is 2777. Okay, that's what it is. So if I was to take this trade, okay, let's say price comes back here and I want to buy at this price point, expecting it to go higher. Okay, so this would qualify as my entry. Okay, but then my stop cannot be below 2778.25. My stop needs to be below 2777, which is below this. So in other words, I am kind of grouping those two UFOs, even though they are in two different charts. One is volume based, one is tick based. Okay, it's two different natures of charts, but I do need to group those UFOs and treat them like one because they are there. I cannot ignore that UFO. It's there. Okay, I may have if I was to set my stop here, okay, I may have a situation where this market comes to here, stops me out by one tick or two, turns, and then goes to my target. And what just happened? Well, this UFO didn't work well, but that UFO did work very well. If I had set my stop below, then my stop would have been here and I would have never been stopped out because those are on-field orders. So I should respect that. Is that making sense? So the same thing happens in Forex. Okay, the same thing happens in Forex. You guys have been very quiet for a long time, by the way. So if you know, I'd be grateful if you were to just type all good or just listening or something like that. So I know we're still connected, everything is good, and you guys are following. But basically, just like here, we got UFOs in two different charts and we will group them together in Forex. So if you were to look at the 55-minute time frame and find a UFO in some location, for example, here, 10840, okay? And then you move to 55 range, okay? And at 0840, okay? So look at that. So we don't have anything at 40, okay? 40 is right here, but we have this one at 41. Okay, and given the decentralized nature of Forex, isn't it that we always add, breathing space for stops and so on? So certainly that UFO would overlap with the other UFO available on the 55 range time frame. Sorry, on the 55-minute time frame, because this is the range. You can see the R. Okay, so again, so the choices on when using range time frames and minute time frames, as I was saying before, you got two choices. So choice number one, okay. Always check minutes or time-based plus range-based UFOs, or choice number two, okay, check UFOs from either the time-based time frames or the range-based time frames. In other words, it's either you combine them both, which is perfect, or you focus on time-based or range-based, and that's the only thing you do. That's less perfect, but it's still valid. You're still relying on UFOs, so you're still doing something that makes sense. You may get a few more stop outs if you don't look at both, but it's not going to be that different. Okay, it's not going to be that different, especially in a market which is Forex, which is decentralized. Now, what's the downside of doing number one? The downside of doing number one is that it's more tedious, it takes more time. So I could understand that some of you, especially in larger time frames, may be like, you know what, I'm just gonna look at time-based charts. I will ignore range-based. I forget about the ranges. I'm not gonna say it's wrong. Okay, I will not say it's wrong. It's okay. Just like if you were to trade futures and you were to say, I'm just gonna be using the 2-minute time frame. I will not be using the volume and the tick charts. It's not wrong. Okay, you will have less odds, but it's not wrong. It's okay. So same story here. Okay, same story here. Anyway, so this is the first answer to the question from Osman. Let me see. Reading your comments here. All good listening. Yes, all good listening. Still here. Good. All good listening. Intensely concentrating, listening, but a bit confused. Nurgul, I understand. Nurgul, is your first time with us, isn't it? And I'm very happy to see you with us. By the way, but it's okay. Yeah, just do what you're doing. You know, you are completing the class at the moment in time, so complete the class, and then you can always come back and review all of this, and you will see how it makes sense. Okay. Today we are, we are talking about things that are quite advanced, and only the ones of you that have been doing some practice with it would be able to grasp 100% of what I'm saying. So, I'm okay if you feel a bit confused. If you feel totally lost, then I guess I'm not doing a good job. Okay, but if you feel just a bit confused, it's okay, because I know exactly where you're at right now in your goal, so you'll be fine. Ray, I picked the number one option since I only do spot forex. Very good, Ray. And realistically, I mean, how long it takes for you to switch from time to range? So it's just one click. Actually, you can even set up your trading view with the three time frames in front of you: the common time frame, the time base, and the range base. So again, you can make your life quite simple. It's not that complicated. But I'm just giving you choices, guys, and it does make sense to ignore range timeframes. It's okay. It would not be crazy to do that. Okay, so that's why I said it. Okay, so now second part of the session here has to do with this document that has been put together by Osman. Okay, so Osman has done a great job as well at putting time and effort, and he basically created his own summary. Okay, and the idea is that we read this together and we validate this together. Okay, so certainly I can just validate it myself, but I would like to make it an exercise. Okay, so I'm going to read it carefully, and then on the chat box, if anyone has anything to say, either as an additional comment or suggestion, or anyone realizes, hey, you know what, I will not agree on this, or I think this is wrong, or I think this is right, or so everybody, please feel free to participate. And keep in mind, this is a learning session. So if some of you are newer in the process, and let's say you were to say it's right when it's wrong, or you were to say it's wrong when it's right, it's okay. We are here to learn. Okay, so no need to be shy or anything like that. Everybody, please participate. Okay, that's my point. So Paul, Jose, am I right thinking that you can use replay on the range time frame? You know what? I think you're right, but I think that TradingView just fixed that. Let me try, because I read the other day that now second time frames and I believe range time frames are available for backtest. So let me click. Yeah, it still doesn't work. So in the minute, yes, it works. In the seconds, so second time frames, it was not working, and I believe now it's working. Yes. So maybe I didn't read that TradingView news correctly, because I thought I read now it's working. I didn't try it. So let me try again. 100 ranges, for example, and let's click replay. Yeah, and it's not allowing me to replay. Yeah, so you're right. You're right. For range time frames, the replay is not active yet. Yeah. Good point. Very good point. So anyway, so let's go back to the document. Okay, and again, let's do this together. I click twice on the replay. Try on range again. Click. Yeah, it's not allowing me to do it. Is it working for you, Boyan? Okay, got it. Perfect. Yeah, I mean, it was not working, but somehow I felt, oh, you know what? Maybe it does now, because of that the news I read like just a few days ago, where they have activated replay for second time frame. So I was kind of assuming that maybe it would work. Anyway, so back to the document. So, case number one, confirm climate up. This is what we got, a blue sapphire color autoclimate, okay? And therefore you will want to use buy orders, which is when the markets are up, okay? So final target. The final target would be set on the common time frame using the nearest rival UFO after rounding down the value, the red color UFO, that will be your final target for exit of the trade. Okay, so question, is this correct? Yes or no? Do we set the target using the common time frame, and is it the nearest rival UFO? And do we round the value up or do we round the value down? Go ahead, you guys tell me. Very good, Melanie. It is correct indeed. Nice one. Nice, Mark. Nice, Paul. Nice, Roy. Very nice, Ray. Perfect, everybody. Next one. Entry price. For the green UFO, that's going to be your entry price. Okay. Why? Because it's an up market. So we buy using the green UFO on the edge time frame by using the EMA on the common time frame as an entry reference price. And then we take that UFO price and we add 2 pips extra to not to miss the trade. Okay, so assuming the green UFO was 1050, the buy order would be 1052. So question, is this correct? Yes or no? Target at common, yes, this is correct, Ray. And for the last question I just asked, Leland said yes, is correct. Melanie said yes, is correct. Mark said yes. Melanie said again. Very good, everybody. Perfect. Another stop loss. Okay, so for the stop loss, so we would use the green UFO as a reference on the edge time frame. For buy order, subtract 5 pips after rounding down. Example 145.78.4, that would be 145.78 and then minus 5, so that would be 145.73. So is this correct or is this incorrect? You guys go ahead. Okay, Melanie says look good, look good. Yes, minus 5 pips for cushion. I learned today. Very good, Nurgul. Mark says wrong. Leland says correct. So I'm going to have to say that I agree with all of you, including Mark, that says wrong. Because even though it is correct, I mean, the method is correctly expressed, there is an error. If you go long, your stop will not be a buy stop. Your stop will be a sell stop. So really, it should say for sell order, subtracts minus pip after rounding down, and then everything else would be correct. It would be 145.73, but it would be a sell stop, not a buy stop. Okay. So again, not sure if this is what Osman meant during his writing. Probably that's what he meant. But anyway, when I see the word buy there, so got me thinking that maybe it was a little bit of a mistake. So just in case, I just changed it. Okay, even though it's not a big deal and it would be correct the other way too, if the interpretation was the right one. Meaning that when you stop yourself out from a buy order, okay, but really, to me, you don't stop yourself out from a buy order. You stop yourself out from a long position. So in that sense, to me, that should be sell order subtract minus 5. Okay. Anyway, so nice. So let's take a look at the bottom part of the document. Okay. So what if we got a confirmed climate down, which means we have a red ruby color auto climate, and that's going to be involving sell orders, which is what we do in down markets. So statement number one, we're going to set the final target using the common time frames, looking for the nearest rival UFO green color. And let's say it was 110.40. Well, then we're going to add 2 pips, and therefore the target will become 110.42. This is the final target for the exit trade. Correct or incorrect? You guys go for it. Yes or no? Correct, incorrect, good or bad, all good or mistake. What would you guys say? Correct, Mark. Very good. Yes, Paul. Very nice. Very well said, Melanie. Yes, buy orders add 2 pips. And also Ray, yes. And Roy, yes. Very good. Fantastic. Okay. So what about the next one? Okay. Entry price. Okay. Entry price. Red UFO on the H time frame by using the 9 EMA on the common time frame as per reference price. And it would be the red UFO at the EMA. Okay. And there is no change on the price. Okay. Like earlier for the buy orders. Okay. The entry price experiences adding 2 pips. Here, the entry price experiences no change because it's a down market and it's a sell order. True or false, correct or incorrect? What do you guys say? This is correct. Very good. True. Well said, Melanie. Very good, Mark. Very good, Paul. Wonderful. Very nice. And then the last one here, the stop loss. So what do we have with the stop loss? So stop loss using the red UFO on the H time frame, and then we add 7 pips to the stop loss price after running up. So let's say the extreme of the red UFO was 145,784. So you take that value, you make it, instead of 78.4, you make it 79, and then you add 7, becoming 145.86. So question, is this correct? Yes or no? Is this the right approach? True or false? Correct, incorrect? Yes, no? Go for it, my friends. And by the way, we are about to conclude the session, so we'll just keep going 5 more minutes and we'll call it a day, okay? So I haven't taken a break today, and we will not take a break. We'll go to the end. 5 more minutes, my friends. Very good, everybody. Everybody's having the right answer. This is true. This is correct. Very nice. Very well said. So now rounding. We round up to buy green UFOs. We round down to sell red UFOs. For buy orders, we round up the entry price to the 4 decimal places. For sell orders, we round down the entry price to the 4 decimal places. That is correct, 100% correct. Now, just as a little additional comment, if you are trading the yen pairs, any currency pair with the yen, it's going to be the same, but instead of the 4 decimal place, it's going to be the 2nd decimal place, okay? Because the yen only has 3 decimal places, so we adjust to the 4th, to the 2nd. All the other pairs got 5 decimal places, so then we adjust to the 4th, okay? But for the yen pairs, 3 becomes 2. And the final question here concerning the safety target. So we first calculate ES, which is the distance between the entry price and the stop loss value. Okay? And once you got the ES, for buy orders, the safety target is entry plus the distance. For sell orders, the safety target is entry minus the distance. Okay? And then we divide your trades to 2 lots with the same entry price and the stop loss value, and one to end at safety target and the other at entry target. Okay. Well, I got two questions for you. Number one, question concerning the highlighted portion of the question. You guys okay with this definition for the safety target? Entry plus ES, entry minus ES for buy and sell opportunities. Melanie, because it's a buy stop, so adding for 5 pips and 2 that are always required for buy orders. Exactly. And 2 plus 5 equals 7. Very well said, Melanie. Very well said. So now, agree or disagree on the highlighted portion? Yes or no? True or false? Correct, incorrect? Just waiting for your answers, guys. Yeah, this is fun to do these many mini quizzes, isn't it? Yes, it's good. It's good. Yes, and Melanie, it's a good document certainly, and also what's really good is that when you do this for yourself, okay, and notice how Osman is using colors and everything. So this kind of forces you to internalize it, and it becomes yours, So this is a good exercise for you guys to, putting on the side that you all of you that attended the courses and everything else got copy of the slides and everything. So if you retype it for yourself in your using your own words, it certainly helps a lot. Very nice. And the last one here, okay? So this is the last question. So divide your trade to two lots with the same entry price and the stop loss value, one to the end and safety target, and the other at the exit trade target. Okay, so how do you feel about that statement? Okay, are you 100% okay with this, or is there anything here that you would like to rephrase or state differently? Go for it. That's the teacher in you talking. Exactly. So you guys go ahead. How do you feel about that statement? Any changes? Fully approved? True, false, okay, correct, incorrect? Final target, all good. The one at the end would be exit final target. Very nice. So hey, all of you are right. Okay, so you guys are right on your comments on the chat box on the YouTube channel. Osman is right as well. So he's just using slightly different words. So for example, if I think of Bojan comment here, so instead of exit trade target, is calling it exit final target. So changing that word. So that would be more, if you wish, more appropriate based on the terminology we use in the sessions. Okay, but again, as long as Osman understands what he means here, it's fine. Okay. My only concern, my biggest concern, is also about terminology in this statement, is the fact that Osman is using the word lots. Okay, and even though you divide your trade to two lots, meaning that, so let's say you are trading, I don't know. $44,000 of currency. So you divide that into two lots, which is 22K each, right? So it's understood, but at the same time, it happens to be, in my mind, the wrong word, because one lot in Forex, okay, one lot in Forex has a meaning. So one lot equals 100K. Okay, so divide your trade to two lots. It makes me feel like 100K one, 100K the other one, and this is not how we do position size. So I'm pretty positive this is not what Osman means here, but just in case, I think it would be better to change the word lot and use the word, use the word trade size or any other word instead of lots. Okay. Again, it's just a matter of the use of the English language, but just because in Forex lots means 100K, so it becomes a bit tricky. Okay. Very good. Divide risk into two parts. That's very nice. Two parts, maybe probably the best way to say it, Andrew. Could change the final target. Got it. Melanie, it keeps the risk the same and lets him the safety and the final for the two targets. I agree, should be called final target. The automation is what's important. 2 orders. Very good. Yeah. So I think we're all in the same page. We're all the same, saying the same thing with different words in this case. But I think it's all good. And again, congratulations to Osman for putting this document together, and nice job, nice work as well for you guys. Confirming and doing this little quiz exercise, which I think is quite healthy, isn't it? Oh, set and forget. I get you now. Set and forget for the 2 targets. Okay. Very good. Everybody, so I think that we're going to conclude the session here. It's been a pleasure, as always, to be part of the session with you guys. It's always a tremendous pleasure to join you and share our passion here. We're all very passionate about the markets, and spending time together is always a pleasure. So keep up the good work. Again, as I said before, it makes me really, really proud to see the evolution in many of you. I want to go back to Roy very quickly. Roy, I know I owe you an email, and your email, by the way, was quite important. So I've just been a bit oversaturated in recent times, but I will get back to you. I have that under control, so no worries. Look for an answer soon, and we can talk about this more in depth. Okay, and everybody. So you guys keep up the good work. Welcome to the session for the ones of you joining us for the first time. For example, Nurgul. Pleasure to have you with us, and everyone else. And you guys keep up the good work and keep communicating with us if you have questions with emails and everything. So see you soon. See you next week on Tuesday. And one last time, just in case you are coming late to the session, trade with UFOs / get together. Okay, so get into the get together session of our website if you haven't done it yet. If you missed the beginning part of the session, we are running a free trade plan class and backtesting class the next week. Make sure you don't miss it. You need to click in those boxes and do the registration to get your unique link and password for each one of the sessions. So you're going to have to click 4 times to be registered for the 4 sessions. Make sure you don't miss it, okay? The ones on the left are going to be 2 hours each day. The ones on the right are going to be 3 hours each day. So it's a 4-hour class and a 6-hour class, and it's going to be potentially really, really impactful. And I think that the timing is going to be very right for many of you that, have taken the classes, are ready to begin, but you are lacking on a little bit more additional structure into what you do how do you do things. So these 2 classes may really unlock a lot of your potential. Okay. So see you then. See you soon. And looking forward to it, my friends. Bye-bye, everybody. Take care.